The US dollar remains extremely vulnerable with consecutive weekly selling as capital flows continue out of the United States and into other major economies, given the tariff uncertainty putting a shadow over the US economy. Key PMIs this week, guys. Ken Chigbo back with another E8's market fundamental update. Let's jump straight into this. So, the US dollar continues to be a casualty. Remember all those weeks ago, say months now, we were talking about the dollar being king. It was on top. We had all this optimism around the US economy. Data was smashing expectations. Markets were pumping to the upside with the Trump trade. But everything just crumbled for the dollar's empire, and it has lost its crown. And we are continuing to see that selling pressure. Obviously, that selling, as we noted back here, from mid-January, where, it was the case there. Markets, digesting the fact of Trump come in, he sat down and, all that upside pressure, the buying anticipation, unwinding out the trade, sell. Obviously, we had some uncertainty with the tariffs, which have further, snowballs has been growing and speeding up with its downside for the dollar. It's been very consecutive in terms of the weekly. The structure you can just see is extremely bearish. When we put this on a daily in a moment, you can just see the lower highs, lower lows, and it's just been clean flush. And we've had that growing uncertainty around the US economy with a number of big institutions, putting shadows over the economy with increasing of recession forecasts, the odds of recession for the United States. Data has been somewhat subsiding a little bit, cooling in the labour market. Inflation's coming down now. We've had a bit more dovish Fed speak. Jerome Powell did last week, however, pushed back a little bit and just look, we're just going to continue to observe market impact from the tariff, the impact on the markets from the tariffs, all of that stuff. But dollar does remain vulnerable, okay? As I say here on the weekly, very clean flush to the downside. Look here, this is where I'm talking about how clean structure is with these lower highs, lower lows, boom, 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 boom. Very clean to the south. Obviously, we breached that. There was a lot of, I'm sure there was some stops being triggered to the downside. You can see it's evident. Boom, big drop through that 150 area. Got this natural consolidation after this recent big drop, understandably. And obviously going for a bit of a breakout and retest of 99s at the moment, the mid 99 region. Okay, you can just sort of see that underway. Okay, we broke out of this flag, this wedge breakout, and then just this retest, a bit of consolidation, and looks subject to, as I said to you guys in the previous video, when we look south, 98 is the next major demand zone. Okay. If we just quickly recap last week for the dollar data, I'm just going to filter everything out, but except dollar. Okay, bring up dollar here. Last week, focus really was on the retail sales numbers, and it did surprise to the upside. Okay, decent empire manufacturing index there as well, but showing consumer spending was still buoyant. I personally believe that this is not really taken into the full impact of the latest round of tariff uncertainty. Okay, I don't think that's filtered through yet. I think we'll probably see that at the next readings, in my opinion. So I see this data as somewhat out of date from reality. Okay, and hence why it didn't really provide upside pressure for the markets, okay, for the dollar. Rather, I think the markets had the same idea that I do, in terms of that this is just not a true reflection of where really things are at, or have been at, since obviously March, with the Liberation Day of tariffs from Trump. In terms of this week anyway, we're going to be keeping an eye on key services and manufacturing. Obviously, US is primarily a services-based economy, more services than it is a manufacturer. Obviously, Trump ideally does want to get more goods manufactured from the United States. But we're expecting a contraction here in manufacturing, dropping below that key 50 area. Remember, below 50 is contraction, above 50 is growth. Services PMIs are expected to come down to 52.9 from the previous 54.4. That would show cooling, and that would feed into a narrative of slowing down the economy, understandably. Look, really to ignite some selling pressure, we want to see the manufacturing PMI in that contractory territory, and services potentially could come closer towards dipping below 50. Okay, so keep an eye on that. Would really ignite that dollar downside. Okay, and obviously we have the usual weekly unemployment claims, but when you look, we've had a good run of these figures. It's remained steady. We haven't seen a spike higher in the amount of unemployment claims, but all eyes really on those PMI data, and further development, of course, with the tariffs. I know I've been reading sort of the latest headlines and developments, and look, they're keen to want to discuss, but they're both ready to fight, and there's still more tariffs that could potentially be pulled out. It just takes one disagreement, and then there's more tariffs. They can go further, guys. This is not the sky's the limit, But as I said to you guys before, they're just crippling each other's respective economies. More so, obviously, it's triggered by Trump, but it is what it is. So dollar remains vulnerable anyway this week, guys. The euro. We do have key PMI data in the form of manufacturing and services from the euro. Euro right now remains very much supported, as I said to you guys in recent videos, how markets are viewing the euro now as this new safe haven, the new safe place. You can see that there is more attraction in European assets right now, European bonds, European stocks, because obviously we had that boost, we had stabilization in the Eurozone's largest economy in Germany, forming a coalition. We had that stimulus of over 500 billion euros being injected into the euro. So there's a lot of support there. And I said to you guys before, right, historically, we have our safe havens, the likes of Swiss franc, yen, and dollar. But obviously everything that's going on with dollar right now, the uncertainty with this huge trade war situation, dollar's obviously lost its safe haven status without a shadow of doubt, because obviously you can see those massive outflows from the dollar. And it's evident that we are seeing capital rotation, asset rotation out of the United States and into Europe. Okay, into Europe is evident. So that's supporting euro as well. So euro just has the safe haven status right now, sitting outside of yen and Swiss franc. Euro is a safe haven. Now, we did see that upside pressure as we expected last week, okay, for euro. This is 3 strong weeks of upside. Well, really, euro's been rallying since March, tariffs, and quite consecutively there. It remains very much bullish. We've still got this wick that we need to feel, not of last week, the week before, which we were expecting. Obviously, we were expecting that this week. We've got a bit of consolidation right now, this psychological 113 area, which I'd like to see breaking out. I think just this bit of consolidation. Obviously, it's been quiet, like trading, because of the Easter holidays across the world, parts of the world. Okay, we had a bit of a breakout of a bull flag, a wedge, just failed to pick up momentum here. Same sort of thing, really. We're just forming sort of a flag, wedge pattern, waiting to just break out. We form these flags, these wedge patterns, when we're subject to breaking out. We have after we have a breakout, we have periods of consolidation. Obviously, look, just as again here, this is a bit of a point. Have those periods of consolidation where we reload, ready to break out and recover some momentum, and that's sort of the same thing we have happening here. Just a bit of a basic consolidation pattern, subject to potential further buying pressure. Obviously, for me, so long as this zone here holds, this mid-13 region, we should make our way, start grinding down 114.50, use that as new demand, and take a pop into 16.50. Again, obviously, this is not financial advice. It's just sort of my opinion on potential price action this week. Obviously, we'll keep an eye on these, of course, these PMIs. All right, we're expecting those to remain generally steady. Let's see there. Obviously, really, you want to see these creeping higher to further boost investor sentiment and market optimism around the euro, because euro's been seen as a safe haven, but we want the data to back it up a little bit as well to provide that further support, especially given that the fact these have been in contractionary territory. Remember, anything below 50 is contractionary territory. We want to see these getting closer to back towards growth territory. So let's see if we can see some continued recovery there, because we have seen some stabilization, because a few months ago, we were worried about these numbers. They were really, really dropping into deep contraction. So let's see if we could see a further recovery there, given this recent stability in the euro, which would obviously support that. But I would like to see some further buying pressure for euro this week. GBP, we do have key PMI data also from the UK, services and manufacturing PMI. Obviously, the UK is primarily a services-based economy. It's over 70% services make up of UK GDP. That's a big chunk. So that's very, very important. Now, obviously, the previous reading, if you look here, revised lower. Okay, we've seen revision lower there to, when this decides to load, to 52.5 from 53.2. There have been some concerns around the UK economy that we're having this sort of slowdown. It's been a bit of a hit and miss with the UK economy, and now and obviously how prices have been sticky, but those concerns have subsided a little bit. We had we had CPI data cooling down to 2.6%. So that's sort of removing some of those stagflation concerns, because obviously we had a higher GDP reading. Now inflation's coming down. Stagflation is where you have low growth, high prices, but the fact that it's coming down is reassuring. We had better claimant count data as well in terms of the amount of people claiming unemployment benefits in the latest period in the UK. That was better, okay? Only 18.7 thousand. Expectation was 30.3 thousand. And look at the previous, revised down from 44.2k. That's a big bullish revision, down 16.5k. So very bullish data there from the UK, just as I say, just further removing some of those concerns about a stagflation situation for the economy. We'll also keep an eye on Bailey, because obviously the market's trying to suss out when the Bank of England are going to cut rates again, because obviously they've been on pause, which is one partial reason which has supported upside pressure for GDP. We've got retail sales numbers as well, contraction expected there. Given the recent run of data and strong GDP numbers, I wouldn't be surprised if that does obviously beat expectations. With the pound anyway, particularly against the dollar, obviously it's just a one-way train right now, so it's a northbound train. Weekly performance is bullish, after these periods of consolidation here, we broke out excessively to the upside. Structure is very much to the upside as well. When you look at structure, bar this little pullback here, you can obviously see that clean bullish structure there. And we're trying to grind down that psychological 33 mark at the moment. When you look left here, as there is a little bit of resistance, a bit of a gate ahead of a nice quick run into 134. So that's sort of where we're at the moment. We're trying to make some progress there, or GP is trying to use these highs of the previous week. Of last week. We're trying to, the high, we're running into the high of that week, and then obviously slow down. As soon as we get this, guys, it's just a case of, in my opinion, grinding this down, which we're doing now. Bam, bam, use it as new support, break out, and then get a run in towards 134. It should just be quite a clean run, as you've seen here. Look, boom, 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 boom. Get a new bullish, near-term bullish guiding us in towards 134. Obviously, that'll be supported by bullish data here, so long as these numbers remain buoyant. Beat expectations above 50 is very, very key. Well, particularly for services. Manufacturing would be good if obviously that creeps away from this deep contraction that it's been in. 44.0 is very, very much below that 50 mark. But UK isn't a massive manufacturer, so the services is very much important. But yeah, I think versus the dollar and versus other currencies, GBP does and can maintain some edge, particularly if the Bank of England, if there's no guidance from Bailey on an imminent rate cut again, then there's further pausing that will support GBP versus a lot of its peers, particularly against the dollar this week. And Canada, the Canadian dollar, we do have key retail sales data. Obviously, CAD's been in a lot of spotlight of late with obviously we had all the volatility around CAD before. Do you remember with the tariffs, with Trump announcing no tariffs in Canada, but then they got paused because they made good progress in talks and all that good stuff, and they were sort of left out there exempt from all this tariff madness, which is why CAD had regathered some ground, because it was getting smashed to pieces versus a lot of peers. Remember when you look at the likes of Euro CAD, GP CAD, it's just one directional. But obviously we've seen big corrections in those. But yeah, and last week when you look, we had the Bank of Canada rate decisions. Pull this up here. As expected, they left rates, they left rates unchanged. Markets, there was a lot of split. Okay, there was a split on expectations. Some were calling for a cut, but inflation still remains sticky. They want to bring inflation down. They're keen on that. They haven't really committed to further cuts. It's still uncertain as to what's going to happen, because CPI really, especially when you look, the important thing to look at is on an annualized level, and annualized inflation is still sticky, and they want to bring that down. So I don't think they want to rush to keep cutting as they have done, because that's inflationary. That can spark inflation anyway when you're cutting rates, don't forget. So yeah, they're on hold at the moment. Let's keep an eye on retail sales numbers to see if it feeds in with that narrative. You know how we've had this sort of general Canadian economy slowing down, and see if that feeds into the narrative, or obviously if that beats expectations. That's going to help CAD. Now, when you look at dollar CAD, it's the same really as last week. I said that really, ultimately, we need to break down this mid 38 region to open up the door for a big drop down into 136, and it will be fast. You can see the significance of this zone. Look, resistance, 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 okay? Then finally we broke above it, new support, bam. So this is a significant zone. And really, guys, when you look at this, okay, there's no reason as to why this couldn't fast travel towards, breach 136 and fast towards 132. Okay, markets are more concerned about the dollar right now. Okay, so CAD does have an opportunity to really, really drop here and correct itself and fall back in this range that had contained dollar CAD for all that time. Do you remember we were waiting for this breakout, and eventually we got this breakout to the upside? but we could fall back within this mundane range, and I think it has every right to do so given the current situation at present. So keep an eye on that data this week. So once again, we are blessed because there's continued market events, continued talking points with tariffs, so much going on in the markets. I love it. I'm sure you do. Other than that, have a blessed and amazing week, and I'll catch you on the next video.